Today I'm going to talk to you about insurance as a service. So I'm going to open up by giving you a scenario. Imagine you live in a city that potentially is going to get a severe weather event. You get a notification actually from your auto insurance company that this event is coming through town. You live in an area which is heavily populated. Perhaps you live in an apartment, perhaps you live in a condo. Your access to underground garaging is relatively limited. So what the auto insurer has done is secured some underground parking for you so your car's not at risk of being hit by a hailstorm. Now this is an example, I think, a very simple one, of an insurance company providing a service that has real value to you, that doesn't really cost them anything additional, that shows to you that they are really thinking about how they can protect yourself, your assets, your risks, whatever you've purchased. So I have a pretty core belief that insurance, like a lot of things, should be much more service-oriented rather than product-focused. So I'm going to go through a few different examples today, some insurance-related, maybe some not so insurance-related, of where I think as an industry we can take a much more service-focused approach to thinking about relationships with our policyholders. And it has to start at the start. So I think Josh from Cake and Arrow was on earlier, was talking about kind of outside in and inside out. Interestingly, one of the first things that happens when companies think about building a new insurance product is that they go and price the risk through the actuarial team. They don't really think that much about the client experience, what kind of services we can provide. The first thought is, can we build a profitable product? Now, I understand that. I get it. It needs to be commercially viable. What's not often thought about is, what kind of experience can we provide to our policyholders that's going to be excellent? And that also kind of lends into a little bit around client experience, policyholder engagement, and things that we need to think about, I think, as insurance companies. One, I guess, related industry that I think does a really wonderful job of it is banking. And so I'm going to give you an example within banking that I experienced when I was younger that I think a lot of insurance companies can actually try and copy. So I don't know what it's like here. I grew up in New Zealand. I remember on my first day of university or college, as you call it here, I arrived and there was a whole bunch of banks on the quad giving away free pencil cases, free backpacks, as well as free checking accounts. That was really useful for me. I think previously I'd probably been on my parents' banking account, so I opened a free checking account with this bank. They weren't trying to give away free checking accounts to students. They were trying to acquire you as a customer and provide you with a lot of services over your lifetime, right? So from there, I graduated, I think, from university. From there, I got my first job. I had to open a savings account. From there, I managed to save a little bit of money, but not quite enough to buy a car. I got a personal loan from that bank. From there, I got a little bit, my wealth increased. I wanted to start taking credit. I got a credit card with that bank. From there, I was very successful in finding a beautiful woman to marry me. We decided to buy a house. I got a mortgage from that bank. As you can see, this bank, with a very simple interaction at the age of 18 years of age, by giving me a free pencil case and a free checking account, was able to acquire my loyalty and provide me a whole bunch of services over time. I personally think this is a really good example of where an industry that is not too dissimilar from insurance has really thought through a lifetime customer experience, an experience of services, of value that we can provide you that makes it really easy for you to go from one product to another over the course of a lifetime and ultimately buy your loyalty. I think banking does a wonderful job actually of thinking through long-term customer value and experience. This is why I guess ultimately I think insurance should be a service. I know IaaS is a term that's used for infrastructure as a service, so perhaps saying more service-oriented should be great, but there are some examples within the insurance industry that I think do it really well already. So are many of you familiar with Savvy Home Insurance at all? No? It's surprising actually. So Savvy actually is a home insurance provider. When you purchase a policy from them, they provide you with a 10-point smart home kit. It includes things like water detectors, motion sensors, smart smoke detectors. There's a whole bunch of other things, all connected digitally to an app. When there's an event that happens within those services or those devices that they've provided you, you're notified. The idea of this is focused on prevention rather than remediation. I think Savvy, as a home insurance provider, albeit obviously not very well known, is a great example of a company trying to provide services. They're thinking about what can we do to help the policyholder in their life for someone that's bought something from us, and do it in a way that's non-intrusive, that has value to them. And so, again, I've used banking as an example, which I think is really good. We are starting to see examples of that in insurance with Savvy. One area where I feel, I guess, personally very passionate about, and I know it's not very related today, but I think it's a great personal example for everyone, is long-term care insurance. So I think probably most of us in the room have probably had a relative or a loved one that's aging or has aged. It always is not a fantastic experience, unfortunately. It can be quite stressful. For those of you that aren't aware, long-term care insurance was a form of insurance that was heavily sold in the early 2000s. It's almost not sold at all today. It was unfortunately horrendously mispriced, especially with the cost of healthcare going up. The consequence of which is, I think the last statistic was there's something like $250 to $300 billion worth of liabilities, claims, to be paid out over the next 20 years from long-term care insurance providers, of which very few are actually writing new policies. Well, insurance people, we can understand no premiums coming in. Obviously, there's a lot of claims still to go out. People I know in the industry believe that's been vastly underestimated, and there's something like $500 billion worth of claims to play out over the next 20 or 25 years. But if we think about what long-term care insurance is, it's really providing people a opportunity or support or protection to be able to age. I believe long-term care insurance providers and people that have long-term care insurance have objectives that are wildly aligned. I don't think anyone wants to transfer into an aged care facility early. I think most people would like to age successfully at home. 12,000 people every day this year in the US will turn 65. 4.1 million people over the course of this year. Aging is a global megatrend that I think is wildly under-talked about. There's obviously lots of megatrends, but considering that there's more people every day 65 in the US than there ever has been, it's a problem that's going to continue for a number of years. And long-term care insurance isn't really available. Now imagine these companies, $500 billion potentially worth of claims to pay out over the next 20 or so years. Rather than $10,000 a month for someone that transfers early to an aged care facility because they have no support, what about a $250 in-home health assessment every year to understand whereabouts are they likely to fall in their home? Where can we put handrails? Where can we put guardrails? What about those that are perhaps living on the second floor of an apartment building, but there's space available on the first floor? A couple of $1,000s to help them move from one floor to another. What about those that we understand that perhaps live alone and their family member is a few miles away? Is there something we can do to get them closer to their family member? What access do they have to local bus services to get to the grocery store if they're no longer independent with a car? These are all relatively low-cost, high-value things that I think insurance companies, and I'm using long-term care insurance here as an example, can do to provide value to their customers that is service-oriented, that is not predicated on paying out a claim. Now, I'm quite passionate about this. I had a parent, unfortunately, go through this situation, and it wasn't particularly pleasing to watch. But I think long-term care insurance is a really personal example of things that we can look at within other insurance types to think about, why shouldn't we make this a service rather than a product? Now, of course, the trick with all this is, well, how do you enable technology to do that, right? And also, how do we create compelling, but not intrusive, customer engagement? Perhaps this audience aside, no one wakes up in the morning and goes, I'm going to buy insurance today. It just doesn't happen, right? Insurance, unfortunately, whether we like to acknowledge it or not, is a grudge purchase. People buy it because they want to protect a risk. They don't want to buy insurance. They feel like they have to buy insurance. I understand that. I've been in insurance for a long time now. But that means that immediately the relationship with their insurance company is a little bit begrudging, as I mentioned. Not only that, traditionally the other interactions with that company are when they receive a notice that they have to make another premium payment. Now, I will talk to anyone later about unnecessary insurance jargon, and premium is one that I'm incredibly passionate about, so I won't go there today. But that's, again, something where I think we can change. And then the only other interaction they traditionally have, depending on the type of insurance, is when they have to make a claim, which is a relatively high-stress engagement, despite the fact that they might be paid out. Now, if we think about the use of technology, particularly client engagement tools, and perhaps that hypothetical situation I provided you at the start, if we were a lot more regular in our communication with our policyholders, if we were doing things that were providing them with value, very service-orientated, that means that at some point in time we're going to have a much deeper, stronger, and in my experience probably more fulfilling relationship with those policyholders that's more likely to lead to renewal as well. So looking at technology, looking at client engagement tools, which are not new, banking's been doing it for a long time, text messages, emails, phone calls, app-driven notifications, whatever it might mean, whatever it might be, these are all technology tools that are really readily available that I don't see a big use of within the insurance industry today. The second one is the use of analytics. So I don't think anyone here would disagree, and I'm happy to have a conversation with you if you do, that insurers have a wealth of data and information about their customers and policyholders. I don't think it's being harnessed as well as what it could be. There's no reason that we shouldn't know that someone living in an urban area that's likely at risk of a hailstorm coming through shouldn't receive a notification about that. We know their postcode, we know where they live. Why wouldn't we do that as a basic service for a cost of 1 cent per text message? That's providing a great service based on data, based on client engagement tools that we have to be able to do that. The final one is thinking about the way that we build products. One of the challenges that's existed for a very long time is, I've got a great idea for a product. I'm going to go to the actuarial team, get that priced out, but it's going to cost me 7 figures and 12 months to get it out to market, and I'm not entirely sure whether it's going to be successful. There's tools, there's technology available where we can think about those kind of changing client demographics or policyholder demographics, their changing needs over time, build a product in 2 weeks, ship it at the cost of $10,000 or $20,000, test it on a selection of policyholders, see whether or not it's successful. I think the world is changing, from a technology perspective where we shouldn't have to rely on legacy platforms to build, deploy, and test things to see whether or not they're successful. We should be able to do that rapidly, and then we should be able to do that at scale. These technologies exist today, just like the analytics exist today, just like the customer engagement tools exist today. So my thesis, my view, insurance shouldn't be a product. Insurance should be a set of services at which the insurance company and the policyholders' interests are wildly aligned. The insurance company doesn't want to pay out a claim. The policyholder doesn't want to make a claim. They're not in this to make a claim. They're in this to protect a risk in case something happens. So we should be in the business of prevention and providing services to stop that happening rather than focusing on paying out on a claim. So with that in mind, I leave you with this final thought. Insurance is the business about protecting people. There's a lot more ways than money to achieve that. Thank you.